the psychology of trading and my mindset would probably be my biggest challenge. I was confident in my ability to, learn the technology side of it. And well, short-term trading, in my opinion, short-term trading is more difficult than longer-term trading. If you can catch your thinking and realize that what you're doing is your perception is telling you what you think is happening, but it may not be what is really happening. Are you trading what you're really seeing on the screen, or are you trading what you're thinking, or what you want to see? And I think one of the problems that a lot of beginning traders make is they want to start at level 3, but they have to start at level 1, and you've got to build your way up and work your way through up into it.
Welcome to the Trading Battle. I'm your host, Steve Ruffley, and today we're joined by someone who brings experience and calm to the chaos of the markets, Peter Castle. Now, Peter's been trading for over 30 years, 26 of them full-time. During that time, Peter has worked hard to develop an easy, stress-free method to trade, adopting the philosophy, less is more. He believes that trading can be simple, however, being humans, as for now we all are, we can complicate it. Easy Share Trading was formed in 2011 to complete his passion for trading, providing quality teaching to the trading community. He's written 2 books. The first one, an ebook in 2016, Trading Mindful Using Winning Probabilities, and the second, the Zen Trader, in 2022. Peter, welcome to the show. How are you doing?
Thanks, Dave. That's a nice intro, very complimentary.
Well, I mean, I aim to please. Come on, let's start easy, mate. You know, we've been trading a long time. Everyone's got a story how they got involved in trading. What's your story? How did you get involved?
Well, my story is before I did this interview, I actually listened to a couple of your interviews, and I did a bit of research on you, Steve, because I'm sorry I didn't know anything about you. And so I just did a bit of homework, and we have very different backgrounds. My background was as a tradesman. I had a smash repair business, and I worked in that until I was age 40. But in 1995, so I started trading 30 years ago, so I was 35 years of age. I'm 65 now. And I was trading part-time, and I was running my business. And I just, after doing that for 5 years, I decided that I had to make a decision as to which one I was going to devote myself to, because I didn't have the headspace really to do both. And so I sort of bit the bullet and sold my business and went into trading full time. And I got involved in trading. I became interested in trading through the Telstra fight in Australia, which happened around the mid-90s when the government privatised Telstra and sold it, and they sold shares to the public. And, just about everybody in Australia bought Telstra shares. And I think that got a lot of people interested in the stock market. And a few other big companies followed suit, AMP and IAG, which was the old RMA. And I remember going around to all my friends and family and asking them, could they teach me about the stock market? And no one knew anything about it. And I did really struggle to find someone to learn from. It was quite a challenge. So that's how I started. I just started in that way.
Well, very interesting. I mean, that, I guess, is everyone has their path, and, things happen in the world. And I guess, like you say, in your own kind of personal experience, you are right. Trading for a living is a full-time thing. So you have to fully commit. It's not really something I think that people want to believe you can just do it part-time. If you want to kind of make an income from it, you have to dedicate a serious amount of time and capital. So, I mean, what I'm really interested in is this idea that you're an ordained Zen teacher of trading. I mean, what exactly is that? What exactly does that mean?
Well, when I started trading full time, I knew myself well enough. I was lucky enough to know that the psychology of trading and my mindset would probably be my biggest challenge. I was confident in my ability to learn the technology side of it and learn the technical side of trading, and I was good at reading and I was good at study, and I thought, well, no, but I also knew that I could be highly emotional at times, and that if there was something that was going to challenge me in my trading, it would be my thinking and be my mindset. And I'd always had an interest in Eastern philosophy. I started martial arts when I was about 10, and and my sister was a very keen yoga practitioner, and so I'd always sort of had that Eastern sort of interest, and I was reading a lot of books and studying about Eastern philosophy, and I just got drawn to Buddhism. I just really liked the whole thing about it. It really appealed to me, and I just started to study it, but I got heavily involved in Buddhism around about 2010, 2012, and I was looking for somewhere to live. I was moving houses, and I was just going through a bit of a stage where I needed somewhere to live. And a friend of mine said to me, "Do you know the Buddhist monastery down the road has got rooms?" And I thought, "Oh, that's interesting." And so I went down there, knocked on the door, and had an interview with the head monk. And he said, "Well, if you like," he said, "you can move in for a few days and try it out." Well, that turned into 2 years. And then that turned into ordination. So I ended up, that was a Tibetan monastery, or Tibetan lineage, but I ended up moving into Zen, and then I sort of took myself all through Southeast Asia, and I went to Vietnam and Thailand and Taiwan and Japan, and I just got more and more into it. And then I was offered ordination, and so I thought, "Oh, well, I'll do that." And now I sort of help run a Zen center, and I'm a Zen teacher. The thing that really attracted me was also what I felt was a great correlation between what the Zen teachers were teaching me with how to think, and also the sort of thinking that you need in the market. And I just think they're very, very aligned, and that's why I wrote the book, because I started, like in the intro, you said I started teaching in 2011. And one of the things I noticed was that a lot of people were really struggling to stick to any sort of method or any sort of system. And these were, like you said in one of your interviews recently, these were really smart people. You've got clients that are, that are doctors and surgeons, and I've got clients that are airline pilots and, and medical people, and yet they really struggle psychologically with the market. So it's got nothing to do with how intelligent you are. It's just how you think. And I did some training with Dr. Van Tharp in America, and he's got a thing called Tharp Think, and which is he's trying to teach you how to think like a trader. Well, sure. I like to talk about Zen Think. If you can adopt Zen Think, it will really help you with trading.
Yeah, I mean that's really interesting. So, I mean, I guess trading for me again is always quite an expansive thing. I mean, when I trade, I'm a very short-term trader, so kind of minutes and hours. I mean, are you more the kind of overnight holder of trades? I mean, how long's your kind of average trade period? Because I find the psychology, from my perspective, is very different from short-term trading to kind of longer-term trading. So, I mean, how does your Zen kind of translate into the time you hold trades? Yes, that's what's most interesting to me.
Well, short-term trading, in my opinion, short-term trading is more difficult than longer-term trading. Well, they have their different challenges, don't they?
Of course.
So, yeah, most of my teaching is daily swing trading or weekly trading systems. That seems to be what appeals to most people. And most of my clients are people that have been trading for a number of years, and they're normally working and have another job, and they're trading on the side, and they come to me after a few years because they've been through the mill. They've read all the books, they've done a few courses, they've joined a few trading clubs, they've tried lots of different things, and they sort of get to a point where they realize that they need some help. So that tends to be my typical client. A lot of my clients do not want to go full time. They don't want to become full-time traders, but they want to start winning. They want to start winning in the markets. And so I start working with them and talking about different trading methods and different trading systems, and we start working together and we start developing a few things together. And just by that process, I get to know them and they get to know me. And then after a while, I can tell if they're a short-term trader, if they're a medium-term trader, if they're a long-term trader, what sort of trading they're actually going to be good at, how much drawdown they can cope with. That's the big thing, isn't it? How much drawdown can you cope with? So
how much risk? Yeah.
yeah, how much risk can you cop? You know, so you know, it's a very organic process. There's no set rule for every person. But getting back, to your question was, how does Zen help with trading? I do some short-term trading as well, and where I've found that Zen really helps me is that there's a thing in Zen called duality, which is where our mind looks at something, and I'll talk about this in the book. So our mind looks at something, it sees something, and it perceives something. So on the screen, and what we immediately do is judge it and label it. And we say it's good, it's bad, it's hot, it's cold, it's up, it's down. You know, it's a bear market, it's a bull market. This is good, that's bad. And that sends us down a bit of a rabbit hole and can spiral us down into really negative thinking and negative action. So if you can catch that thinking right at the very, very start, so when you see something happening, if you can catch your thinking and realize that what you're doing is your perception is telling you what you think is happening, but it may not be what is really happening. And one of the questions I've got for my students is, I say to them, are you trading what you're really seeing on the screen, or are you trading what you're thinking?
Or what you want to see,
or what you want to see. So,
yeah, sure.
You know, is your thinking like really clouding your judgment? The clouding of judgment comes from all that anxiety and the fear of loss and the fear of missing out and all that's where it all comes from. You know, I know I'm not telling you anything you don't know. So with Zen and mindfulness, you just become a lot more aware of that thinking process. And once you become a lot more aware of it, you tend not to fall into the traps. You know, I mean, here's an example. Say you're trading short term. Say you're trading a currency pair, and you're using 5-minute charts, and you've said to yourself, "I'm going to put a trailing stop on this trade. I'm not going to put a profit target on it. I've gone in. I'm in the trade. I've got whatever percentage of capital you're holding in there." But you've gone in, you've bought it, you're in, and you're going to trail it up. And so once you're in the trade, then you sort of switch your mind from being an analyst, and then in it, you've bought it, and now you're a money manager, and you've got to manage the trade. But what's happening is your mind's going, oh, but it's hit this level, you know, I should get out, I should take half of it, you know, but at the start of the trade, you promised yourself that you would trail it, that you wouldn't take a target. And so, but then you panic and it gets to a certain level and you're up so much and you sell it out. And then what happens then is it keeps going and it trails another 1, 2, 3, 4, 5% up, you know?
Well, it does its job. Yeah, it does exactly what you thought it was going to do in the first place. Yeah,
it does its job, and you've just interfered with the whole process. But it's just the mind that gets in the way. And so with mindfulness, I mean, if you can become aware of your thinking, so that next time you're doing that trade and you're in that sort of trade, and you've said to yourself, you know, my method is I'm going to trail this up, then you become a lot more aware of your mind saying, it's like the devil on the shoulder. Take the trade now, sell it now, you know, sell half or tighten your stop or, you know.
Do something, do something,
do something, you know, do something. Yeah. Whereas often the best thing to do is to do nothing or do what you originally thought. Stick to the original plan.
Yeah. Yeah, no, exactly right. I mean, I think you're so right. I mean, you know, people encounter fear and greed when trading, especially trading for very short periods of time. You know, obviously, you know, kind of investing or taking a trade over days, weeks, and months. That's when you walk away. You know, you have your parameters and you leave that. But very difficult, and you're so right when you speak to professional people, be them doctors, airline pilots, whatever. They're used to their rules, and you know, they're comfortable in their own level of control with the path they've chosen. Whereas trading, you can buy and sell, and everyone thinks it's easy because you can buy and sell. You're either going to win or lose. But there's a massive amount of difference and variance in between that winning and losing. Yeah, and I think that's what people kind of find hard. And obviously, you've wrote a book, a lot of respect for that because I've written a few books. I see you published by my publisher, Harriman House. So we have that in common. But yeah, one of the most difficult things I kind of like tried in my second book was to write things that are kind of very, very difficult to write. Things that come from only personal experience. And it's not necessarily, is it right or is it wrong? It's just you have to experience it before you've got any idea of how you can kind of progress in trading. Because there's some things, I guess, almost like being a parent. There's no one book for parenting that works for everybody. And there's certainly no one trading book that works for everybody. You rightly said about, kind of being that personality. You can tell how risk averse they are after a certain number of conversations. And trading has that whole spectrum of what people think trading is, but what trading really is. So I guess, yeah, I mean, it's all very interesting, this kind of Zen mentality. And do you apply that as well to not just thinking, but also emotions? How do you deal with the emotions when trading? How does that Zen kind of mentality help? Because that's something I've never really kind of experienced, to be honest. I've always hit my emotions and harness them rather than try and filter them out. Is that what you mean by Zen? Filter them out?
In a way, on the risk of getting religious, I mean, Zen obviously comes from Buddhism. The first two things that Buddha ever said was, first one, life is suffering, or you could say life is difficult. I think we would all agree with that.
Sure.
And then he said, the cause of that difficulty and the cause of your suffering is attachment. It's what you get attached to. And I think that's really where it all starts. And with trading, we do get very attached. Well, not just trading, but life in general. So we get very attached to what we want. We get very attached to what result we want and how much we want to win or we don't want to lose. And so the skill with managing emotion from a Zen perspective is that the emotion is always there. I mean, when you're in a trade, say you've got a big position on, and I know that you often talk about size, and I agree 100% with your sizing philosophy. So say you've got a big position on and it's moving your way. Now, obviously that is going to, create some emotion. I think you wouldn't be human if it didn't create some emotion, because you're winning and you've got a big position on, it's going your way, you're feeling good, you don't want to lose, you don't want to give back, you don't want to leave money on the table, you want to maximize the performance of the trade. So all that's going on in your mind, and you may even be getting a little bit of anxiety and your guts may be churning. But the secret with Zen is that you can recognize that all that's going on. You can recognize that you've got all that difficulty thinking and feeling, but you don't have to let it overcome you. You can sort of put it to one side and say to yourself, okay, well, that's just normal. That's anybody. It doesn't matter whether you're Mr. Iceman trader or Icewoman trader. Everybody's going to be feeling like that. That's just how it is. So I don't have to let it overtake me. I don't have to jump into that emotion. I can just hold it to one side and I can just do what I know I need to do, and that means to trade to the best of my ability. And that's it.
Okay, well, that's interesting. So with that kind of mindset, have you ever kind of thought about taking the emotion out completely, almost automating, your kind of trading system and rules? Is that anything you've ever tried to do or dabble in?
I did that many years ago. I did automate some systems. But I found that there was almost just as much work in automating trading systems, and particularly in checking.
Yeah.
I can see you smiling and nodding your head there.
Oh, of course, mate.
There was almost just as much work, if not more work, in doing all that than what there was in I suppose discretionary trading. And can I just expand on that a little bit? Because I think this is really interesting. Is that what I've found with my trading students and all traders is they go through different stages.
Yep.
And I think the first stage is that after losing and sort of bumbling around for a while, you come to the realization you need some sort of methodology or system.
Yep.
And so you go and get that. You beg, borrow, and you steal some sort of methodology. And then after you try that for a while, and the challenge then is to stick to that method and to be able to apply it and do it diligently and be disciplined and take the trades, take the stops, do the correct sizing and so on. And then if you can get to that second stage, which I think a lot of people don't ever get to, so stage one is get something, get some method. Stage two is learn how to stick to it and actually make it work for you. And I think stage three is the big one, and it's probably where you and I are at, and that is that you start to combine all that experience and methodology and systems with some discretion. You know that you can break the rules when you know when to break the rules, and I think that's very challenging. It takes a lot of experience, and I think one of the problems that a lot of beginning traders make is they want to start at number 3. They want to start at level 3, but they have to start at level 1, and you've got to build your way up and work your way through up into it. So I don't know if you agree with that, but that's what I've found.
Listen, mate, 100%. You hit the nail on the head. I call it a trading journey. Now, every trader I've ever worked with or met has a trading journey, and it goes like that. And you either end up like this or like that. So you have to experience it because you don't know what you don't know.
No,
So this kind of thing with trading, it's like, you can almost like, especially when you're mentoring, you can open the door to people and then you can say all the right things to them and they'll say all the right things to you. And then you speak to them the next day and they've lost 50% of their account. It's like, well, what was your daily stop? $1,000. It's like, how much have you lost? 15. Well, how did that happen? Well, I thought it would stop. It's like, well, that isn't a plan. That isn't a system. That's just hoping. But, again, I mean, we're not talking about unintelligent people or, people that are kind of not capable of following rules. But it is. It's once the emotion and that fear of losing money kind of comes in. People get to that point really, really quickly. So, no, it was really interesting that kind of whole, Zen approach. Because, again, on my kind of trading journey, my quest was always to almost, I guess, punish myself, see how much pain I could take, see what I was capable of. And then when you get to a certain level, you can rein it down. But you're exactly right. I think a lot of traders want to go from 0 to level 3 really quickly. And they have no idea about the pain they're going to endure or their learning curve, should I say, and how that's going to affect them in the long term. Because for a lot of traders, they're basically finished before they started because they have no life expectancy. It's boom or bust. And, people can't really endure that in anything, let alone trading, because as you know, trading, could boom and bust you in a matter of minutes if you're not prepared for what's going to happen. So I guess with the world the way it is right now, and your kind of, your kind of mindset, how are you finding the injection of, dare we say his name, Donald Trump? We've certainly injected a lot of not just uncertainty, but market reaction, from kind of, we saw that in his first term that the markets reacted to anything he said. And he's literally came out today and said, all I have to do is speak on TV and I can move the markets. How has that affected your kind of mindset and your kind of trading approach? How have you dealt with that?
Well, he certainly has created some volatility, but let's look at it from a Zen perspective. Who creates the volatility? Does he create it, or does the market participants, the way they react, create the volatility?
Interesting, yeah.
And I would say it's the latter. We don't have to react to everything that he says,
Sure.
because it's all perception, really. I mean, and maybe over time the markets will learn not to react as much to him, because they know that a lot of it is huff and puff and whatever
Smoke and mirrors,
says, it's smoke and mirrors, and that whatever he says may not come to pass. It may or it may not, and so again, it's right. It's all perception, isn't it? It's what we perceive of what is going to happen, and there's just so many instances with trading. I mean, I've traded a long time, and I've traded through the .com crash, the Twin Towers, the invasion of Iraq, the GFC, and even before that, back in the 90s, the Asian crisis, and so there's always an initial perception that the market has to an event, and then after it sort of regathers itself, and thinks, oh, actually, you know what, this might not be that bad, and it sort of regroups and does its thing, whatever that thing is going to be. So I think with Zen, or I know with Zen, that once you learn that everything's perception, and people, you know, if people want to run around like a headless chook, that's fine. Let them do that, but you don't have to do that. You
Sure.
can sit back and watch it, and you can actually take advantage of what's happening. And I try and ask myself, when something happens in the market which is really volatile, and even if that volatility affects my account in a negative way, I ask myself, well, where's the opportunity? You know, where is the opportunity now? I mean, Trump's come out and said whatever. You know, where's the opportunity at the moment? If if for example, what if he comes out tomorrow and says something negative about gold? Okay, now we know that gold's in a screaming uptrend. Let's just look at this. Let's just say he comes out tomorrow and says something which negatively impacts the gold price, and gold takes a dive. It falls $100 or $200. But what we've got to remember is that gold is in a long-term screaming uptrend, and at some point, it's probably going to be a really good buy. So there's
Yeah.
the opportunity. So he's come out and he's crashed the market for whatever he said, but the fact still remains that that particular instrument, whether it be gold or it be coffee or whatever it might be,
Yeah.
is in a long-term uptrend, and at some point there's going to be a wonderful opportunity for you to do a really good trade. So it's flipping your thinking all the time. You just got to continually flip the thoughts into away from the negative into the positive. Where's the opportunity for me in this crisis?
Yeah, no, I think that's definitely right. I mean, I think the thing is, I was always kind of more brought up in the kind of reactionary type trading. So any
Yeah,
piece of news, fastest finger first, you
yeah,
capitalize on that. But obviously, you can have the ability to take that step back and see the initial movement isn't necessarily where you might make your money. But when the markets settle, and as you say, being able to be zen and a little bit more calm, you see
yeah,
that the reaction to the market is actually an opportunity for you. So I mean,
yeah.
what do you kind of trade on a daily, weekly basis? What kind of products are you involved in? What
I
markets? What
mostly
market?
I mostly trade ASX stocks, so
Yeah,
Australian stock market stocks, and at the moment I particularly like the small cap stocks,
yeah,
and I'm focusing on the small resource stocks, and there's a couple of reasons for that. One is that I see that I see an opportunity there with resource stocks, and I think the smaller caps still haven't caught up to the large caps, and also I like the smaller cap stocks because they're out of the AI space to a large
okay,
degree. So if you want to get away from AI trading, that's what I think anyway. My research shows that there's less automated and less AI trading in the smaller stocks than what there is in the big ones. And so the big guys can't get in there and trade them with their algorithmic systems. And so for a retail trader, it's a better opportunity. So that's one place I trade. I also do an occasional trade with currencies or with commodities. For example, I mentioned coffee, or I've got a coffee trade on at the moment, and I did have a currency trade, but that's been closed out. I did have a great British pound Australian dollar trade,
yep.
but I got smacked around on that when the RBA decided to hold.
The hold the rates, yeah. The old
Okay,
chestnut, yeah.
so there you go. So there's an example. See, I thought that the probability was that they were going to cut, and so if they had a cut, then the next probability would have been that the Australian dollar would rally,
Sure.
but that didn't happen, and so I'm out, and that's a perfect example of how you can line all the ducks up in a row and get all your probabilities, but it can still go wrong, which it did. Yeah, so I mean mainly ASX stocks with a few little other currency trades or commodity trades on the side.
Yeah, I mean, I guess these are the kind of things. It's as you rightly say, you can prepare for any trade, and the kind of data narrative, I call it narrative because, the forward guidance from all central banks is, I mean, it isn't what it used to be. We're not back in the days of Jean-Claude Trichet of price stability. It's a lot more kind of theatrics now, isn't it? And, they're trying to everyone's looking for that big move or that big cut. And we've really been kind of treading water, I guess, from a kind of, forward guidance perspective for a number of years now. And yeah, I mean, obviously, Australia, I'm in New Zealand, so interest rates are much more sensitive, because people are a little bit more kind of obsessed, should I say, with property and talking about property. But yeah, but I think it's really interesting right now just to try and take that step back from the narrative, for the noise, and just kind of keep a methodical system going of just looking, like you say, for your edge, for your value, for looking at something that maybe AI or computers can't get involved in. That's a really interesting point about the liquidity, and maybe those kind of small caps are just not worth the kind of effort and investment it would take, to kind of automate and AI these things. I mean, when you watch the kind of markets, do you think there's, obviously we know about high frequency trading that's been around for decades. Do you think there's AI in the market? Do you think humans still have that edge? How close are we, in your opinion, to being taken over by Skynet and the Terminator? Have you got any thoughts on, kind of automated trading from that next level?
Well, you've probably seen the figures like I have. I mean, I've read figures that it's now 75% of the markets is automated trading. It might even be higher than that. And I read that about 12 months ago, so it's quite possibly higher than that now. Yeah, I think that as retail traders, we do need to find a space which is, I was going to use the word easier, but more friendly to us. So it's an ever-evolving part of the market, isn't it? I'm struggling to find an answer to that question, but I just think the way around it really is to keep looking for opportunities within the market. I've developed a lot of systems over the years, and I've traded a lot of back-tested mechanical systems. And there's a couple of things I've noticed is that when you run your tests over a long time, and even ones that I've developed sort of 5-10 years ago, and I keep my data sets. So say I've developed a data set of stocks 10 years ago, and I developed a system 10 years ago, and I run that system now with exactly those stocks, and you look at the result, and it's compounded at 25-30% per annum for the last 10 years, and you look at the equity curve, and you think, well, if you were just a machine and you didn't know about Afghanistan, Iraq, President Biden, Donald Trump, COVID, if you were totally oblivious to all that stuff and you just traded the system, well, this is where you'd be.
Yeah, exactly right. Exactly right.
So we read so much into everything that the news that's coming into our feed. We just read so much into it all the time. And so somehow we have to try and detach from it and remove ourselves from all that stuff and just trade our system. What else can I say?
No, I think you're exactly right. I mean, if it was just that easy, like Donald Trump, I don't want to keep bringing him up, but, if he'd got his inheritance and stuck it in the S&P 500, he'd be one of the richest people on earth. He didn't go into like casinos and all the other things, The Apprentice. So yeah, I mean, we look at the data. This is really important, actually. When you look at the data and the overall trend, yeah, if you just keep buying the dip, then that's worked consistently over a long period of time. But you're right, we get dragged into the news, the theatrics of it, the kind of prove we're right type things. That's really interesting. Yeah, I also think as well, although it's great to say, and you're right, you're exactly right. If we were all to take the emotion out of trading and take the kind of the ups and downs of trading, but would you actually then be a trader? I think, as I think, you have to take a bit of that pain. You have to take a bit of that unknown, because it's only a certain type of person that wants to be a trader and make their income that way. You have to be a little bit different, I think, because otherwise, you could just leave your investing to, your IFA and, do your day job or your business on the side. There has to be some middle point, some meeting point where you want to be a trader. And I think, you need to have these, sense of being right. And that has to be, mirrored by the sense of being wrong. Otherwise, nobody in the right mind would ever choose to trade for a living, because I'm pretty sure there are easier ways to make your money than being a trader. But certain types of people are, definitely drawn to it. And it's kind of, you're very right with your kind of Zen approach. I think that whatever works for you is what works for you. You've got to find a way of dealing with the emotions, the ups and the downs, and the money is there to be made. But again, I'll touch on the other point you made, that from the retail side, it's very far detached from the pro side. You just don't have the physical speed. I've interviewed some other traders, that have kind of traded, sizes in the billions. When you talk about the retail trading size, what a lot of people fail when I'm trying to get them over this idea they could trade for a living is thinking in big enough numbers that, actually hundreds of dollars, an hour or a day isn't going to replace an income. I mean, how do you tell people that want to kind of, I know you said it earlier on in the interview that, people want to do this as a kind of a side project or something, to kind of use some capital with in their spare time. I mean, how do you deal with people that want to actually trade like yourself for a living and make money from this? How do you get those kind of guys over the line?
Well, they have to do it in steps. If they can't, I mean, if you know as well as I do that to make money as a full-time trader, as a profession, as an income, you need to trade fairly regularly, and you need to trade size. Size is probably the most important thing. You can get away with not trading that often, but you still have to trade size. If you don't want to trade size, then you have to. If you bring your size back down, then you have to have more frequency in your methodology so that you make the money. And that's a big leap. It's a huge leap for most people. And to bring someone up to that level, they have to be able to show themselves, not just me. They have to be able to show themselves that they can take a method or a system that has a winning probability or a winning edge, and then they can execute that system with a fair degree, of success.
Yep,
And
consistent.
they got to be consistent with it. And if they can do that, say they start with a weekly system, which is probably going to be too slow for that sort of person, but okay, let's bring it down to a daily system. So they have a daily methodology that they can, at the end of the day, they run their scans and they put their trades on. If they can do that for a number of weeks, months, years, and then they can increase the frequency of their trading, and then they can increase the size of their trading. That's a process, and it can take years to do that. Yeah, but you've got to start somewhere, and you've got to be consistent, and you've got to do it. And then what always happens is that something goes wrong. I'm just thinking of a client I had recently who was extremely intelligent and very good with technology and very disciplined, and traded a sim account for quite a long time, and then went live and lost lots of money. And that is just such a common story. And
It is.
And now that person has got to build themselves back up financially and emotionally to go again. And that's really difficult. And that can happen two, 3 times, 4 times.
Sure. For sure.
I started trading full time in 2000. It took me 3 years to make any money. So, and probably one of the biggest lessons I had was that, I went full time in 2000. Within a few months, I copped the .com crash. And then, and after the following year, there was 9/11. And then there was about 2 or 3 years of the coalition trying to decide whether they were going to invade Iraq or not. And that went on for a couple of years, and that was all. I mean, you're fairly politically minded, and that was all a bit of a fiasco. And then when it actually happened, when they went in on March 2003, the markets went up. And I thought, well, I was a relative beginner, and I just couldn't believe that the markets went up. But I know now that that markets hate uncertainty, and because
Absolutely.
once they knew what was going to happen, well, then everyone went, oh, okay, now we can get on with it, So it's just trial and error, isn't it? It's trial and error. It's picking yourself up off the ground when you've had, you've been kicked off
Yeah.
the horse, and you just got to pick yourself up again and keep going.
I think you're exactly right. And, unfortunately, it's, to use like cliched sayings, it's, I hate to say it, but it's it's a marathon, not a sprint.
Yeah,
You can make a lot of money in very short periods of time trading, but it can take you a long time to get to that point.
Yeah, that's right.
It's not a right. You know what I mean?
Yeah.
It's kind of something you have to earn. You have to earn the ability to be able to put that size on, knowing there's a high probability chance it's going to win. But
Yeah.
yeah, if you want to kind of skip, like you're right, people want to skip parts 1 and 2 and get straight to 3.
Yeah.
I also find
there's a great movie which I tell people to watch, and it's called Far from the Madding Crowd. It's actually an English movie, and it's about a guy. You've heard of it?
I've heard of it, but
it's about a young guy who's a sheep farmer, and it's set around the 1800s in England, and without giving too much away, he loses everything. He loses his farm. He loses all his sheep. He's even got this favourite dog that he's in love with, and he loses the dog. The dog dies, and then he proposes to his girlfriend, and she knocks him back, and so he's got nothing. He loses everything, and he's got to start again. And what he does is he takes a job as a labourer, and this is a guy who was a fairly successful property owner. He takes a job as a labourer, and he just plods along, and he builds himself back up. And he goes through all these dramas, and the movie ends. It's a happy ending, He basically sort of gets what he wanted right at the start of the movie, but geez, he went through some stuff to get there, And I do the same thing. So what I do is, because I'm an ex-tradie and I'm actually an ex-spray painter. I used to paint cars for a living. When I go through a bad patch in the market, I turn the computers off, I take a break, and I go and paint something. I go and paint the back veranda, or I work in the garden, or I do something with my hands, and I get outside. Okay. I have a swim, I go for a walk, I'll go to the gym, and I take a break, and it's a physical, mental break, and then I come back. And that's what I've done for the last, 25 years, really. If I hit a bad patch, I stop, I take a break, I regather my thinking. I think, what am I doing wrong? Where have I gone wrong? And it's normally in my thinking, it's normally in my process. 9 times out of 10, it's my process and my thinking. It's not the market, it's me.
Yep, it's you. Yep, the guy with the mouse. Yep.
Yeah, it's me. And just taking that break, I think, okay, right, that's what I need to do. I need to regather and build myself back up again, physically, mentally, emotionally, psychologically, and I'm back in there again. So,
you know what? I think that's really interesting, because very few kind of traders I actually interviewed recently have said the realities of just taking a step back and regrouping. I've done it myself. It's when because I was always, because you obviously wrote your book, and I wanted to ask you, what it was like for you to write a book. For me, it was kind of, I'd gone through a very busy period, lots of ups and downs, kind of done well, and had to take a step back. But I didn't want to kind of take a step back from the trading world. I just didn't necessarily want to trade as much for a period of time. So I found writing and putting things down was like my release, but without being outside of trading, if that makes sense. So what was the kind of writing process for the book for you? I was just personal, an interesting question.
Yeah, it's a great question, because the book actually came from a series of losses. What happened was, just before COVID happened, I don't know if you can remember, how well you remember, but the markets were on a tear, and I actually thought they were going to melt up. I mean, it looks like we're going to have a melt up now. We may not, but there's some people talking about a market melt up at the moment. But just before COVID hit, I was pretty convinced that we were going to have a melt up. Well, that's I was backing myself and I was backing my account, and then you've got to back yourself and take the risk. So I took the risk and I backed myself in that we were going to have a melt up. And I actually increased my size a lot just before COVID. And then what happened was COVID came, and I actually took some pretty big losses at the beginning of the COVID correction, and it really knocked me around psychologically. And I thought, okay, I need a break. And then I missed the recovery rally, and because I had decided to take a break and write the book, and I sort of used the book as a bit of a healing process, really. And I found the book extremely challenging to write. It took me about 2 or 3 years to write it, and I had a very difficult taskmaster. Dr. Alexander Elder wrote the foreword for me.
Yeah, I
and
saw
he,
that. Yeah.
and he was a taskmaster, and I left school I left school at 16, so
Sure.
I did go back to uni later in life, which helped, but my English wasn't the best. My grammar, so yeah, it was a huge learning curve for me. And Steve from Harriman's was fantastic. He really helped me along the way. Really held my hand, and the whole Harriman's team, they were great. I think without them, I probably wouldn't have been able to do it. So,
Sure.
and my wife helped a lot. Cynthia's a clinical psychologist, and she really helped me a lot as well with writing the book. I don't know if I'd ever write another one.
I'm
they're,
with you there,
they're,
mate. Yeah.
they're hard work.
Oh, I'm two and done. Yeah.
Yeah, they're hard work. But it's like everything in trading. You learn so much about yourself, and having to
Of course.
actually, sit down and write about 20 years of trading.
Yeah.
20 years full time at that stage, 25 years altogether, and just reflect and look at yourself and really be honest with yourself and with your audience and tell it how it is. It was a great thing to do. It really was. Yeah.
Yeah, I mean, total respect. I've got respect for anybody in our space that can write down and you know articulate all the nuances of yourself and of trading. So yeah, it's very interesting. Yeah, when I got the notes across of what you've done, Peter. So yeah, it's very interesting. Very, very interesting. I mean, if people want to get in contact with you, Peter, I mean, what's the best way to find you? Are you on social media, or what? Should they go through your website?
Um,
What's
I,
the best way?
I don't do a lot of social media. I am on Twitter, the Zen Trader,
Okay.
or X, Twitter X, or they can just Google my name, Peter Castle, or they can Google Easy Share Trading. I mean, it'll come up on there. So, or they can, if they're really keen, they can go and buy the Zen Trader.
Yeah, of course. Yeah, absolutely. Yeah. No, totally. I mean, I think the thing with these interviews is, we could kind of probably talk for hours. But I think we've kind of, we've crossed majority of things, that were kind of certainly that I wanted to pick out about the whole kind of, Zen, the mindset, and that you kind of written the book was very interesting. That's from someone who's traded like myself for a long time, and be able to speak to somebody who has put it down into words was really kind of helpful. So I mean, is
Yeah.
there anything else you want to talk about? Why we're still recording? Is there any kind of other thoughts or kind of questions you want me to ask? You can just splice them in.
Well, I'd like to ask you some questions actually.
Okay, we'll turn the
And
tables. All right.
similar, yeah. Well, let's turn the tables.
All right. Okay. Let's have it,
So,
Peter.
so, so you asked me, how do you see things with President Trump and the way the markets are, and what are your thoughts on that? I think that's a burning question that a lot of people in the audience would probably like to hear.
I mean, I think really we're going to have to look at this And I know different types of people. So when I say these things, they're not just necessarily what I know of and I believe. I've been very honest in my book, how we see the world going in the next, 5 years to kind of key milestones of 2030 and 2050. What we can't have is the continued of all the money and assets with one generation. So Trump's going to have to address that at some point if he wants the kind of the American dream back. Interest rates with the debt rolling over. The way it is, we're going to have to see a big shift in interest rates, and we're going to see some sort of hyperinflation. So it's just really when they talk about when you kind of hear the word redistribution. They're not going to make anyone younger richer. They're only going to make older and different generations poorer. The elite, the kind of upper class, the elite class, they're going to keep all their cash. We've seen it, with these tax cuts. We've seen it with, the government contracts. They basically, essentially, in my mind, to some extent, privatize the stock market. So there's going to have to get some give and take between, the generations, what I'm seeing. And, while we're going to see, asset prices, especially in houses, maybe not implode, there's going to have to be a trade-off between those who still have a job, still pay tax, still have a mortgage, and those who want to retire, get the 401ks in the US, and keep the stock market high, but kind of also deal with all the inflationary pressures that's going to present. We can't have it all. We can't keep spending and creating this huge amounts of debt for the younger generations, that are going to be paying it off. Then still expect them to pay into a system, that they're really never going to be able to benefit from. So, you drop AI into that, you drop in, the huge amounts of layoffs we've seen, the huge revisions we've seen in non-farm payrolls, ADP, we're not creating the jobs. Manufacturing jobs aren't going to come back to the US the way they were, back in, the 50s, 60s, and 70s. That isn't going to happen. So what it's going to be replaced with, I don't know. The system can be, fueled by debt. It can be fueled by the illusion of growth. But you're never going to tax a country into prosperity. And we're seeing kind of opposite sides of what's happening in the UK and Europe, what's happening in America. And when we say kind of tax cuts, it isn't the kind of tax cuts, that the middle class, the working class are really going to be able to benefit from. We see the tax cut in the US. It is for the, kind of more Bush era, old style trickle down economics, which hasn't really worked. So, in a roundabout way, I know I've just fired off a lot of my thoughts. It has to get worse before it gets better. And what's being promised by this golden era, I just don't see how it transpires from a balancing the books, dealing with the debt, into realistically what jobs are we going to create and what prosperity we're going to create for the younger generations to really kind of, bring any real true growth through. Because what we're seeing is, and you see it in Australia, not that I'm there, but, the NDIS, and we see it in New Zealand, a lot of growth and well-paid jobs are coming from the government sector. So you're almost paying twice. You're paying the public sector, then pay their tax, and they're not actually bringing prosperity through the real economy. It's just putting up rates, putting up tax to pay people higher wages, to keep the whole system almost stagnating. So it's a very small part of this, I believe. And again, I don't want to kind of, it's not my interview. I don't want to go off on a whole, tinfoil hat, kind of the world's a complete conspiracy. But I mean, the way you see that I have seen money and prosperity and growth, you couldn't have planned it any better from a demographic kind of perspective. To concentrate the wealth in order to take it away, to be replaced with nothing but something that isn't human. It isn't driven by human. It isn't driven by ordinary people doing a job, building businesses, small businesses, being independent. It's just a huge way of almost privatizing capitalism. That's how I see Trump kind of moving forward. Unfortunately, I don't really see any kind of economic growth or plan to get America out of that. And if America and the West, follow. I just don't see what we're doing in order to kind of redress the balance of debt versus growth. In a nutshell, I don't see how any one policy is making that happen, or a collection of policies making that happen. So yeah, I wasn't really kind of prepared to launch into a roughly rant, but yeah, from my perspective, where's the jobs, where's the growth coming from? I just don't see it.
Yeah, so it's a bit like you're looking at the global economy like a good trader looks at the market, and that is that
Mm.
you're hearing the story, you're hearing the narrative, but
Yep.
you're not seeing the evidence, are you?
Well, I was
Yeah,
writing about this when I wrote my book, Peter.
yeah,
So like when I was looking at the non-farm payroll figures, I'm like, no, I'm not buying it. Then you see the
yeah,
revision, and these revisions have been coming on for over a year. Then you see
yeah,
people like Trump in his first term talking about the non-farm payroll figures. I'm like, wow, whoa, 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 why are you getting involved in things like that? That's not your
yeah,
job. So the narrative that I've seen, and yeah, we could melt up, moon every stock,
yeah,
moon crypto, moon gold. It doesn't make any difference because the way I look at it, if we carry on the way we are, we'll destroy fiat, and you can have your gold bars, your bitcoins, but if there's no fiat. What's the alternative? Everything you own, all you'll be able to do is borrow against. That's where I see it. And we'll see
yeah,
what happens in the EU in October when they bring in the digital euro or whatever version of that they bring in. So once you can see it yourself. The cashless agenda in Australia, you must be able to see that. The censoring of
yeah,
the internet, we have to log on. There's a lot of things our side of the world that people aren't privy to, apart from when the BBC picks up a bit and runs with it. It's what happens when the money goes, what happens when the power goes, what happens when we have digital ID. I would see, when they let Elon and his Doge, whatever it was called, kind of agency in to check through the data of, Social Security and stuff. Where's the billions that were going to be solved? Where's the billions refunded? Where's the billions that were going to be kind of, brought back into people's pockets? At the end of the day, that number just went down and down and down and down. Planty and Peter Thiel got involved, and now who knows what data they've got, what they're going to do with it. I don't know. Money, power, and control. Right, that's the way the world's worked. Scarface. Trump's always wanted the money. Elon's got the money. Who wants to control? The people that back the people that we see in office. So, unfortunately, for me, as a trader, I'm a very cynical person, and I wish I wasn't. But I just see us marching down this path to, a China-style kind of model, and I don't really know how to fix it or stop it. But yeah, it is Trump. I don't really care what Trump does in the markets. To be honest, I've never really voted. I don't care about voting. I've done well enough that I don't need anything from the government. I'm not rich or powerful enough to want to bend the government into my will. I just want to be left alone. So from my viewpoint, all I see is Trump is going to be 4 years of distraction while the people around him, make lots of money. What we're left with at the end, I don't know. I really don't know. But it won't be, I don't think, this golden era that he talks about. It will just be another layer and level of control where the damage has been done. That's just how I see it.
I mostly agree. One of my observations here in Australia is that Australia is often criticised for not having an economy which is industrialised enough. I mean, I know that some big American traders see Australia as a farm and a mine, and that's it. That's all we do. Basically, we farm and we mine. And then there's the criticism around the housing market and say, well, all we do in Australia is really just build houses. And I sort of think, well, that's interesting because from a Buddhist perspective, I mean, that's a pretty good thing is to be able to provide a home for someone, for someone to live. So there's nothing wrong with providing homes and somewhere for people to live safely. But I think the problem is there's a lack of political will to make it fair, and it's not fair. The system's not fair, and when it's easier for I've got a nearly 22-year-old stepson, and it would be easier for him to buy an investment property and live at home than it would be to go and buy a home to live in.
Yeah, exactly.
Now that's wrong.
It is.
You
It is.
You the government should be encouraging homeowners to be able to buy, and discouraging, making it harder for investors and make it easier for homeowners. And you can't tell me that we haven't got the people out there and the smart people that know how to devise that system, but there's a lack of political will, unfortunately, to do it. So, and that again comes back to your theory that the reason why there isn't the political will is that it's squashed by the big players who have a different interests, and that's why it doesn't happen. And that's
well, exactly. I mean, that's where people get disillusioned. You get pushed to the left, to the right, and it's really just another layer of money behind it. But listen, Pete, I mean, we could. I should fly over. I'll fly over. We'll go for a beer, mate. We could talk all night about this kind of stuff. But I think we'll wrap the interview up there. What you've said is really really tweaked a few things for me, which is nice. That's why I like doing these things. It was really interesting. So we know how to get you on social media.
All right.
So massive thank you there to Peter for sharing such valuable insights, which I've personally found very, very interesting. So remember to check out his book, The Zen Trader. I will certainly be buying a copy, and follow him on X. And it's been an absolute pleasure for that, Peter. So I really do appreciate your time. Thank you very much.
Thanks, Steve. It's been really great to meet you in person. I've, like I said at the start of the interview, I've followed some of your work, and I really love your philosophy around your sizing techniques, time and size. I think that's really, really great advice, and I intend to follow that up a bit more. And thank you for the opportunity to be on the Trading Battle, and to all the people behind the scenes who organised it. It's been great, and I hope people out there really enjoyed the interview.
Yeah, good. I mean, that's all we can ask, really. We just that's why I like these things. Two blokes, two traders, with plenty of experience, having a chat. We don't have all the answers, but that's it's great to hear your story. And I appreciate your time. Thank you, Peter.
Yeah, thanks, Steve.